Welcome to the On the Rise podcast, where we talk about time freedom, passive investing through real estate, finance, and mindset. Let's dive in. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice. I am not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. All right, welcome back On the Rise podcast listeners. Thank you again for jumping into yet another episode of the On the Rise podcast. I'm your host, Jeremy Dyer, and I've got another amazing guest with me. I know I say that all the time, but let me just preface that by saying this, okay? Regularly, when I'm having investment conversations with investors and prospective investors, I always have the disclaimer that I'm not a CPA, I'm not a tax professional. Well, guess what? I have one on this episode. Michael Uadiale, welcome to the show.
Thank you, Jeremy. It's my pleasure to be on your show today.
Absolutely. I'm definitely looking forward to talking with you and chopping it up. So Michael is a CPA who helps entrepreneurs and families build lasting financial freedom that can be passed on for generations. Michael blends marketplace wisdom and real life coaching stories to equip listeners for what he refers to as purpose-driven success. So with that said, Michael, would love for you to kind of take the stage here, let us know a little bit more about yourself, your background, your journey, what you're focused on today, etc.
Thank you, Jeremy. I appreciate again, like I said, the opportunity to be here. So, my journey dates back to my birth and having the opportunity to have been raised by a dad who was an entrepreneur. Now, immigrating to the United States some 28 years ago, um, I cut my teeth in the reality of taxes in the developed world. um, in an experience that was not really the most pleasant, but not also uncommon. What I mean by that, I had just passed my CPA test, and I got a great job in Silicon Valley. There were a bunch of stock options attached to the job offer. And I remember somebody from HR saying to every one of us, "Oh, you need to consult with a tax advisor on the implications of your stock options and how best to ensure that you are not overpaying taxes." Well, I just passed my CPA, okay? And I'm working in industry. I had not gotten my CPA license and I was new in the country. But guess what? I really did my best to take that advice. I looked for a practicing CPA and I explained the situation to him. He charged me a boatload of money, and I had no scruples paying that bill, which I paid. But my expectation and hope was that my taxes were going to be lowered. Well, let me put it this way. After I paid that fee, engaged him, he never really talked to me again until it was tax time. And when I went into his office and those taxes were done, he told me, and I'm talking of about 26 years ago, that I was going to owe the IRS about some 80 something thousand dollars. Then that was a rude shock for the amount of money he had charged me, what he was supposed to do for me. So really, he ended up not doing anything for me. That experience stuck with me. So as I went through the journey of the corporate ladder, I began to see more and more how important it is for people who are really keen on financial freedom to have a good tax advisor. So by the time I felt I was done with corporate America, that experience really propelled me to knowing that I could help bridge that gap. Too many business people, in fact, too many business people are every day overpaying their taxes, not because the government is asking them to do so. That's the tragedy of our profession. The challenge is they've done so for so many years, for so long, they think that is the only way to go about it. And Many business owners now, when you even meet them or they have the opportunity of meeting a good tax advisor who begins to say to them, there's a better way to legally, ethically, and morally reduce your taxes, it sounds too good to be true to them. That's how I started my journey. So when I left corporate America, I went into private practice, and from the very beginning, I was clear what I wanted to do. I wasn't interested in compliance. Compliance is just the reporting that the government requires from everybody, whether April 15th or October 15th. That's just a bunch of forms. Anybody listening to this show today should be asking themselves, am I overpaying what the government has not asked me for?
Yeah, that makes total sense. And you're really talking about kind of being, more proactive, than reactive. I'll never forget, Michael, when I was in my early 20s, I really, was able to successfully become a, higher income earner, very early, in my professional career. And I'll never forget my tax advisor, CPA, when I asked him the question about why do I pay so much in taxes? What can I do to reduce my tax risk and exposure? His answer was, Jeremy, you make a lot, you pay a lot. And that was basically the end of the story, right? It wasn't until I got a little bit older where I started to realize, wow, there are tax advantages to being a small business entrepreneur, scratching your entrepreneurial itch, right? Investing in things that come with tax benefits like real estate, for example. So I'd like for you to maybe double click, Michael, on this concept of, I know that you oftentimes will say that taxes are not a punishment, but they're a set of government incentives. Can you maybe unpack that for us a little bit more?
Absolutely. That's a very popular saying of mine anytime I'm on a podcast or I'm speaking. The reality is that the entire tax code is just a roadmap. I think the first thing every business owner needs to understand that the tax code was not written by accountants. Okay. And so that's why the kind of answer you got from your then accountant when you were just come up and or coming, that's the typical answer most CPAs or accountants are giving to clients because accountants are very linear in the way they approach things. Okay. I happen to have blended accounting and law and all of that. The tax code was written by lawyers. And the way lawyers work or think, they don't think in a linear manner. So the tax code, like I always say, is a set of incentives, right? It's a set of incentives for investors and entrepreneurs to behave in the way the government wants us to behave. Let me unpack that a little bit for you. If you remember, during the COVID years when everybody was shuttered at home, businesses were like going belly up and all of that. Uh, One of the industries, as an example, that suffered significantly was the restaurant business. All right. So, what and how did the government try to help the restaurant business? Typically, right? When you look at your income statement and you see that line meals and entertainment, let's say a business owner spends 5, 10,000 a year on meals and entertainment, even though he or she spent $5 or $10,000, when that person's tax return is being prepared, only 50% of that meals and entertainment is deductible. Now, during those 2, 3 years of COVID, because the government wanted us to spend more money with sit down restaurants, even if we didn't go in there to sit down, but to the point that that restaurant you purchase that meal from is a sit down restaurant, it has a seating capacity. That money you spent in that enterprise is 100% deductible for the 3 years of COVID. So you see, the government tries to shape our behavior with tax incentives. One of the reasons why real estate is a popular go to if you are really trying to get to financial freedom quickly, it's because of the associated tax benefit. You want to ask, why does real estate, for example, have a whole lot of very significant tax benefits, which maybe a day trader in stock trading doesn't have? The answer is the government doesn't want to be so involved in being the one building houses for its citizens. All right? The government wants people to see the tax incentive in that industry and drive capital there. Because as an investor, if you know that the capital that you put in into an area of business, you are not just only increasing your net worth, but you also finding yourself in a position where you get very beneficial tax benefits, there is more likelihood of capital to go in that direction. So all across the age, when you go through every regime or every administration, every of their tax laws that they bring to bear is driven by what their priorities are. On the basis of that, they make those laws to match what their priorities are. So that's why I say it's always a set of incentive. So a smart investor always has to look at it from the perspective of what exactly is the government wanting me to do here? Because if you really understand that, you truly put yourself in a position where you really make the government to begin to pay your tax bills. But over and above tax bills, it's all about money. It's about cash flow. Every time you are not writing a check to the government, as long as that thing is being done in a legal and ethical way, see that money as cash flow that you can reinvest in your business. So it's really just a set of incentives.
Yeah, it makes total sense to me. And this is really, enlightening because a lot of people, look at taxes as being, they try to avoid it at all costs. But really what you're suggesting let's figure out what the tax laws are and where the government wants to incentivize us to invest or deploy, capital into or spend our time. And let's use those tax laws to our advantage. Does that make sense?
Absolutely. So one of the things we do in our firm is once we come in contact with a new client, the first thing is we want to know how you're making your money. And then the next thing is we begin to look at how you make your money and say, what are the tax benefits around that instrument of vehicle? I think one of the challenges that most investors or entrepreneurs face, I don't think many of them are doing the best for themselves in truly trying to figure out who is a tax advisor that is a great match. Mark my word, great match, not a good fit for the way I make my money. We are all CPAs, I get that. But over time, some people choose to begin to really invest themselves more into some particular industries or some areas, and then they become more conversant with the laws in that industry and area. Okay. So the reality is the taxpayers should become better engaged in how taxes impact them. So when they are interacting with a tax advisor, they are interacting with somebody that truly understands their business and go from there.
I'm Zach Haptonstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in these large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investor. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
I'm glad that you mentioned this because, not all tax advisors and CPAs, are created equal in the industry. So what would you say, to the maybe unsophisticated individual that doesn't really know how to kind of sort, the good and the bad, what would be maybe some red flags or green flags, that we could be on the lookout for, as we look to potentially source or upgrade, our tax advisor or CPA relationship?
Good question, Jeremy. So I think you already gave one yourself, maybe unknowingly, when you gave of your experience. When all you are hearing from your tax service provider is no, you cannot do this, you cannot do this, you cannot do this. Honestly, that must, again, I am a very intentional person in the use of words. That must be for you a red flag. So I typically say to my listeners and my clients, never come ask me if I can deduct this piece of clothing as a business expense, because that framework is an inaccurate framework to put around taxes. If you're going to come to me, your question to me should be, Michael, how can I deduct this piece of clothing as a business expense, legally, ethically, and morally? You're going to hear me use that all through our time together. It has to be legal, it has to be ethical, it has to be moral, because the tax code provides roadmap for everything. Taxation is all about law. I know most people make the mistake of thinking it's just numbers. No, it's law that is translated or superimposed with figures. Tax is all about how can I do that. In the example I just gave to you, if I truly am so super keen on not paying taxes on the money I have spent on this piece of sweatshirt, then instead of allowing the logo of the maker to just be here, I'm going to take one more step and have my company's logo be on here. Because in that way, I just translated this to being a uniform. Now, that may be an overly simplistic example, but to your question, how do you find or know that this is a good tax advisor? A good tax advisor has to be proactive in asking questions, because that's something that is not happening many times. Too many times, there is this love-hate relationship between the tax advisor and the taxpayer. And so, really, most taxpayers are avoiding interacting with their tax service providers. You got to make sure your advisor is proactive with questions, because if he or she is not asking you great questions, they cannot ever understand truly the nuances of your business. So that's one big issue. Again, depending on the level of your subscription, if your business is getting so complex, you don't want to work with a generalist. Seriously. There's a reason why the surgeon is earning a whole boatload of money more than the general practitioner, because the surgeon has gone beyond that level of knowledge and expertise of the GP, right? He or she has elevated their game to focusing on just working on brain, to focusing on becoming an oncologist or whatever area of medicine. It's no different from any other profession. I mean, one of the reasons why I like the law profession, you really don't too often find generalist attorneys. Attorneys learn to specialize right out of from college, because that makes them better. And I think the CPAs also have to learn to begin to do the same thing. So for you as the one that is receiving the service, you got to look for a CPA that matches you. I mean, I can say this with very clearly on your show. I don't do too well with clients who make their money, right, through their physical effort. That's just because of who I am and my personality. I do better with professionals, people who make money by reason of their, I'm trying to find the right word. So it's easier to find me working with licensed professionals, doctors, dentists, architects, people who are in the health space, right? And then real estate investors. But it's very challenging to find me work with a general contractor, because I'm not really that kind of person. My wife can't even get me to change a light bulb in my house. So I think that translates to the kind of people I lean towards in providing service. So those are some of the key things that you should be figuring out when you want to hire an advisor.
Yeah, totally. And I think what the word that maybe you were trying to look for there is avatar. So your customer avatar, right, is a certain type of individual that you're generally more attracted to, and they're more attracted, obviously to you as well. I know that you're also a leadership coach, and a lot of this really has to do with having the right mindset. I remember when I was in my early 20s, I would go out and find the cheapest CPA I could find because I just thought, you know what, it's an automatic thing, right? They plug in some numbers, it spits out a tax return, and I'm good to go. Nowadays, I meet with a tax advisor and a CPA every single quarter, right? And I probably spend 10 times more money today than I was spending back in my 20s, but the overall impact to me in terms of how things play out on my tax return is much more favorable today than it was when I was in my 20s because my tax advisor is proactive in making suggestions and recommendations on ways to help mitigate tax burden. Does that resonate?
That's absolute. I mean, you put it better than I could have. Really, most people that have this love-hate relationship, they meeting only with their service provider maybe only once a year. Meaning, okay, 2025 just ended. Now it's tax time. People start gathering their receipts or whatever, trying to meet with their tax provider. That's playing a losing game. Really, that's playing a role. You cannot be choosing a tax service provider on the basis of the fee. What I say to prospects, for example, is that our services are free. What I mean by that is we are very clear. We say to a prospect, if we do not see a roadmap by which we can help you reduce your taxes by a minimum of 3 times our fee, we don't want you to be a client because after that 12 months of being a client, we want you to be in a very objective mind frame to make that assessment of has this been a return on investment that yielded for me? Because as a business owner, as an investor, anything you do must be disciplined and be approached from the perspective of is this just an expense or is it an investment? An investment is expected to yield me cash flow. It's expected to help me make more money. The moment your CPA is just a line item, that's an expense, you don't see value there, then something is not right in that relationship. Either you engaged him at a level that he or she, in the first case, as a CPA, should not allow himself to be engaged in. Because I'll give you an example. We don't take clients whose only service they are interested in is doing tax returns, because that to me is just a waste of everybody's time. If you're going to be a client of our practice, you coming into an engagement that is a consulting and a coaching engagement over 12 months. In fact, your tax return is just only a validation of the 12 months of coaching you. So you are absolutely correct. The relationship has to be constantly be one where there's communication. I mean, if you're meeting with your CPA less than once a quarter, I think you have a major problem there if you're an investor.
Yeah, I couldn't agree with you more. And I think, just to kind of oversimplify this, I think all too many people, they look in the rear view mirror instead of looking out the front of the windshield, right? And so oftentimes when they meet with their tax advisor, it's too late because you're meeting with your tax advisor in March or April, or if you file an extension, maybe it's July or August, right? And now you're talking about last year, which you can't really do anything to change, right?
Yeah, so that's exactly the situation. And so that's why personally I like to do a whole lot of educating. And I think most businesses and business owners really need to understand what taxes is all about. It has to be planning. I mean, 80-90% of Americans spend more time planning a 2 weeks vacation than they plan their taxes, which is something that directly impacts their financial life in a great way. What do I mean by that? If you're not doing tax planning, guess what? What you're doing literally is you giving anywhere from 13 to 18 years of your productive life to the government, which the government did not ask you. What do I mean by that? When you're not doing tax planning, think about it, and you're an investor and a business owner that is successful, you are going to be anywhere from 24 to 37% tax bracket just on the federal side of things. So what that means, if you are the 37% tax bracket, is for every 8 hours of work or effort that you put into making money, 37% of that is going to the government, where you could have easily and legally reduced that by as much as 10 to 20%. So when you take that totally over a 60 or 65 years of work life, you're putting yourself into a tax jail of anywhere from 13 to 18 years. That's what most people are doing to themselves. So they don't get to their goal of financial freedom early enough. By the time they are getting there, they are worn out, they are exhausted because they've been overpaying in taxes that could have given them cash flow that they could otherwise have taken and put back into their business and accelerate their process of wealth.
Yeah, amen to that. And I want to call that a mic drop moment there, Michael. No, in all seriousness, you're exactly right. My own personal situation, which a lot of people that listen to this podcast regularly have already heard my story, but I reduced my federal tax exposure by 80% when I started getting proactive versus reactive. So, now that we're kind of towards the tail end of this podcast episode, I'd love for you to maybe give our listening audience just what's the first step that you should take if you want to get right with your tax exposure in 2026?
I mean, it's easy. This couldn't have been a better time to be asking that question. Find a good tax advisor. Yesterday, there's this cliche of saying that once you have been able to identify or know you have a problem, that problem is half solved. Find a good tax advisor, because when you do, you are on a journey to magic that is legal.
Yep, makes total sense. And I appreciate that. So now that we're kind of wrapping up the episode here, what would maybe be one or two different ways that our listening audience can connect with you to learn more about what you're up to?
Yeah, so the easiest two ways to grab a hold of me is one, just send an email to taxes@smithcpa.com. That's T as in Tom, A as in Apple, X as in zeros, E, X, S as in Sam, at smithcpa.com. There is somebody who is constantly looking at any emails that come there. Now, we do have a library of video lessons on a platform that is called School. The School is spelled S-K as in kite, O-O-L. So if you go to the school.com/Financial Freedom Academy, the Financial Freedom Academy is one word. So school.com/Financial Freedom Academy, you definitely can get some of our lessons there for free. And if it's something you want to explore further, you can reach out to us and we will be happy to see if we are a great fit for you.
Yeah, wonderful. And we'll definitely put those links in the show notes for the episode. Michael, thank you for bringing a tremendous amount of value to our audience today.
I hope so. So thank you so much. It's been my pleasure to be on your show. Thank you.
Of course. And listening audience, thank you again for jumping into yet another episode of the On the Rise podcast. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the On the Rise podcast. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decisions, please consult with a professional. This show is copyrighted by the On the Rise podcast. Written permissions must be granted before syndication or rebroadcasting.